Hello everybody, welcome to Monday Morning Must Knows. My name is Merlin Rothfeld, and here's some things to pay attention to for the upcoming trading week. Now, on the heels of a monumental earnings announcement for our major Magnificent 7 stocks, at least 5 of those Magnificent 7. Remember, on Tuesday night you had Microsoft and Google. Nice little moves there for them. Then all of a sudden, Apple, Amazon, and Meta on Thursday night, which vaulted the markets higher on Friday's session, closing in on all-time highs for the NASDAQ, breaking all-time highs for the S&P and the Dow. Just a roaring week. Now, will that continue? I don't know, but I do know there's a lot of earnings announcements, and that's, of course, is where we're going to start today's show. So let's dive into our Monday session with earnings. We have 698 companies reporting earnings this week, including Caterpillar. We have McDonald's, Vertex Pharmaceuticals, On Semiconductor, Simon Property Group, and Tyson Foods. Tuesday brings us Ford, BP, Gilead Pharmaceuticals, Snapchat, Amgen, Eli Lilly, and Fortinet. On Wednesday, you've got Alibaba, CVS, Disney, and PayPal. Thursday, it continues. You've got Illumina, you've got Duke Energy, Take-Two Interactive, Philip Morris, and ConocoPhillips. And finally, on Friday, we've got Honda Motor Corp and PepsiCo. So a full slate of earnings, although none are going to be as magnificent or as powerful and moving as we saw from Meta and Amazon on Friday morning. Wow, what a boost those gave to our tech sector and markets overall. Now, we had some major announcements also last week from our central bank, which of course said we're keeping rates right where they're at. However, Jerome Powell did say we are most likely not going to raise anymore, and we foresee some rate cuts coming this year. Of course, markets rejoiced over that. It was already kind of priced in, but that's the U.S. market. We talk so much about the U.S. market. What about other central banks around the world? That brings us to our next topic, which is, of course, is central banks. We're going to go to the southern hemisphere, though, to the Reserve Bank of Australia. Now, they have a rate statement scheduled for Monday evening at 10:30 p.m. Eastern Time. So this is a late one in the wee hours of the night when most people are not going to be trading. However, for you Forex traders out there, there may be some opportunity, and I do expect there to be some volatility. Why? Well, because it's a rate announcement, and they're so impactful, whether they do anything or not. And what are they expected to do for Australia? Here you go. 4.35% is where they're currently at, and they are expected to stay exactly where they are at 4.35. The world is on a holding pattern right now with regards to rates. Now, what could happen here is any deviation away from that 4.35% rate could cause huge swings in that Aussie dollar. So for you Forex traders out there, be very careful. Might get some nice market moves. Now we're going to talk about a topic we don't talk about much. Inflation. I know. I'm just kidding. I know. We always talk about inflation here. Now, when we talk about inflation, one of the goalposts or the metrics that the FOMC focuses on, and that's going to be CPI. The biggest one, of course, is the core PCE price index. However, CPI, which stands for Consumer Price Index, measures the prices of a basket of goods and services. And over time, that's what we get clues at to our level of inflation here in the United States. Now, all the way up until 2002, right? All of 2002, they would revise the components of CPI once a decade, which seems a little bit lax, right? Things change over a period of 10 years. Now, you go from 2002, they changed the rules. So from 2003 to 2022, they dropped it from 10-year revisions to every 2 years they revised the components and the weightings of that basket of goods and services, the value of them. However, last year, things changed yet again. And now, instead of doing it every 2 years, there is an annual rebalancing of the components and the weightings of CPI components. Now, if we're using this as such a critical measure of inflation here in the United States, I mean, we're constantly pointing to this, getting a read as to, are we going to raise rates because inflation is high, or are we going to lower rates because inflation is under control? That's what we're facing right now. The important thing here is to understand that we are going to go through a rebalancing phase. So, your cost of your goods and services may be adjusted here. And I like this simply because I think it keeps us important with the times. However, we may see at next month's, at February's reading of our consumer price index numbers, all of a sudden, either a big move up in inflation or a big move down. Personally, I look at this as an opportunity for them to modify the components of the CPI index and paint a rosier picture. What does that mean? That means that February reading will probably be better than expected, showing that inflation has dropped even further, getting closer to the Fed's target of 2%. Now, of course, I don't know which way that's going to go, but the rebalancing of this portfolio of goods and services is supposed to happen on the 9th of February, coming up here at the end of the week. So that's the last little piece here. It's not really an actionable item. It's more about be aware of it because the components of a major market index are going to change. And we don't know which way that's going to modify. I will look at it certainly once it's done and see how they have changed things, but it could create some big moves in our markets going forward. That, my friends, is your Monday Morning Must-Knows. We'll see you next week.